Welcome to Lead Clinic. I'm your host, Dr. Peter Vitale. We have Andrew Filar here from Allstate Insurance. Many of you know Andrew, and he's been a friend of mine now for, I don't know, Andrew, say we met about a year ago, I'd say?
I think it's been a year, but it feels like it's been like 5 in like the best possible way.
I love that you say that because that's how I know like I'm truly like enjoy somebody.
For sure.
If it's been like it feels like it's just been for forever, then I know I actually like the person. I don't know about you, but like probably people would say this because I am like on this podcast now and doing this, like that people would think I'm naturally an extrovert. I'm naturally like very introverted. So like I like people, but I don't like really like that many people. But like I feel like I have a great relationship with you, and it's something, and we have a lot in common. But you know, tell us a little bit, like give us the brief overview of your story. Many of our listeners will know who you are, but I think help us level set here for the rest of our conversation.
Absolutely, I'm happy to, and thanks for inviting me on and having me. I've been in the insurance industry for about 10 years. I went to college and studied finance and economics undergrad, and I didn't know what I wanted to do, but I knew I didn't want to work in finance. And I was serving tables, and one of my buddies was like, "Hey, I'm working at this insurance company," and he's like, "The work is cold calling. It sucks, but I think you'd be good at it, and I think it's a great way to kind of get your foot in the door somewhere." And that was a State Farm agent, and so I took that job out of college and started my career in insurance at 21. And what I did was I just cold called businesses trying to get them to give me their drivers and their cars to quote their commercial auto insurance. And, it sucked and I hated it and I had no success, and surprised I didn't get fired, but I stuck with it. And I'm glad that I did, because finally started to see success. And I was a producer for this guy at State Farm for a couple of years, and eventually made my way over to Allstate, where I, got hired to be a salesperson for the largest Allstate agency in the country, and quickly started moving into management roles, and then wound up working as the operator and running his business for really the last 8 years until, 6 to 8 months ago, I split off completely on my own and started a consulting company, and along with my own agency. And so, that's probably a very condensed version of the journey, but I've been in the insurance industry for about 10 years, very much focused on growing and scaling agencies.
All right, and so you started when you're 21, so like it's been about 10 years, so you're early 30s.
I'm 31 now.
You're 31 now, that's what I thought.
Now.
Okay,
yeah.
And I'm 37 now. For those that don't know, I get sensitive about my age the older I get.
No.
But all right, but I'll say this, and those who know me well know, like I'm not easy to compliment people. Like I always think people could do better, work harder, but like I have a true level of respect for you, and I think you,
thank you,
are one of the people that I've met in the insurance industry, not just the Allstate world, but in the insurance industry, that actually has their shit together, that knows what they're doing. We had lunch a few minutes ago, and we kind of talked about a little bit about what I would call inauthentic nature sometimes of like insurance agents sharing numbers and stuff like that. And I think it's just, it's kind of weird to me because there's a lot of ego. And I think one of the things that the first time we met, like we shared a dinner together that someone else organized. And, we kind of, with two members of your team, like really the four of us had like our own conversation, from the rest of the group. And there was no ego ever. And it was so unusual for a very successful insurance agent. And I think that's part of the reason I really like you, is there's no ego, and there's also no bullshit. Like you're very transparent. And one of the things that recently has come up is you started a newsletter. I subscribe to a few newsletters, but not many. Yours is one that I do. And like the first thing, like when I get it, it's like, it's just authentic. It's screenshots of like your actual reporting metrics, like from the Allstate reports. Like you're very transparent. Do you find that other agents are less authentic than this? There seems to be a lot of ego. You don't have any. I'm just curious why.
For a long time, I never shared anything. And I don't know why exactly. I think part of it was when I was running, that large Allstate agency, we always just kind of kept to ourselves. And I think I had this mindset of, well, I don't want to share any of my secrets, because if somebody knows how, we're succeeding, that will kind of close the door for us to do the same thing. And then, when I opened my own agency in 2018, and I know there's probably some timeline overlap because I ran both for a while.
Sure.
And we scaled very quickly. We just hit 5 years, went from scratch to 32 million.
So zero to 32.
Zero customers, 0 to 32 million in 5 years. And, people would be like, oh, that's amazing. That's amazing. And I was just kind of like, whatever. And we talked about this, and I think I used to have a lot of imposter syndrome around, it's not that impressive, or, it wasn't that hard. And I think when you look back, you sometimes forget the struggles you went through, and then sometimes the successes that you had as well. So when it came time for me to kind of start sharing with people, I thought about, what am I trying to achieve here? And so, a big part of it, just transparently, is, that I started the consulting company. And if you want to be a successful consultant, people need to know who you are and what you're an expert at. And so I wanted to share that expertise. But something I wanted to do is I wanted to make sure that whenever I shared my numbers, I was sharing a legitimate screenshot of the actual numbers. And the reason that I wanted to do that was because I had heard from so many agents that, this person writes this many items, or this person's producing this much. And then we'd see kind of like the national leaderboards, and those numbers wouldn't exist. And it's not that they were lies, but it's possible that just the way that Allstate was doing the leaderboards didn't make sense. But what was important to me more than anything is that I think sometimes people create a benchmark that's not realistic, or they don't understand what would make that benchmark realistic. So somebody might be absolutely crushing it, but if they give no insight into how it's being done, well, if somebody is a smaller or newer agent who's trying to aspire to be that same thing, how do they get there, right? And it needs to be more than just, well, hire this guru and pay them a ton of money and you can be successful like them. Because I think anyone who's been in consulting knows that that's just not true. It's not what it is. We're not miracle workers. We can help you with a specific goal and help you get there. But it's really important for people to understand what you can actually bring value to them, right? And so when I started sharing, I wanted to be very transparent about our numbers. I wanted to be transparent about what was going well, what was going poorly, what was going really freaking bad. And then I wanted to share with people kind of the way that I thought and how I got there. It's definitely, I'd be lying if I said it wasn't self-serving, but I try to add value anytime I put anything out. I don't want to just puff myself up or share numbers for the sake of sharing numbers. That's not really the goal. I want to try to give people a roadmap because people gave me the roadmap, and that's kind of the idea.
So you said that, right, this is life. Nothing goes perfect 100% of the time. I think that's with the ego part that I talk about with insurance agents, that people don't share what's going bad or what's going, I forget what you just said a second ago, like really horrible or something like that. But I think that the authenticity is like the most important thing, and like being like super transparent. And right, I think it's also helpful for like everyone's emotional health, right? We're talking to an audience right now of largely small business owners. It's stressful. You're balancing family, you're balancing your business, you have your family depends on you for income. Your employees depend on you for income. Like, it's a stressful situation sometimes, oftentimes, right? Virtually all of the time in a small business. So what's like, just be really authentic with us. What's going really bad right now? What do you want to, like, what are you working on to get better?
Yeah. So, I think, in the midst of us having an amazing year from a production standpoint, right? So we have had a record year for new business and production, in the insurance agency, and that's been amazing. And I think a lot of people use that as like the single measure of success in a business, which is crazy to me because, ultimately we're in business to make money, right? We want to increase revenue, we want to decrease costs and make profit. And it's pretty straightforward, yet production tends to be kind of the vanity metric that we all share because, for lack of a better term, it's an easy measuring stick, comparatively to your peers, but also it's what, I'm an Allstate agent. It's what Allstate tends to want us to focus on and produce at, and that's how they reward people. And so people tend to focus on that. What it's about though is it's about revenue and it's about profit. And so, full transparency, something that's been hard for us is that towards the end of last year, we took a massive rate increase. I think it was, an average of 25%, as high as 47. One of the great things about that is that we'll grow eventually, but in the short run, a lot of customers get pushed out into the marketplace to shop and leave. And that makes total sense, right? It's a basic economics problem. When price goes up, people's willingness to spend, isn't always going to match up with that price increase. So people are going to shop. And so what's happened is even though we're growing, that premium has to bake in. And as people have left, we have to kind of cross the chasm, so to speak. So in the 6 months between earning in that increased premium and the people leaving, we've been in a little bit of a cash flow crunch. Like we've run in the red all year, so if our goal is to make profit and then, either grow or reinvest back into the business or invest in other ventures, by that metric, we're failing. We've been running red all year. The reality is that we've had to consistently balance, do we want to continue growth or do we want to try and tighten it up and get profitable? And we've continued to grow. But that might not last the rest of the year, I think, with some of the challenges. If we don't get profitable in the next month or two, we're going to have to probably slow down growth to do that. And so, that's been one of the challenges to exacerbate the issue, right? Is like we went into this year expecting to make significantly more revenue than we did last year, just based on the way that our compensation plan changed. And that has not materialized. And so we created a bunch of forecasts and projections based off this. And you don't know what you don't know, right? It's like, and we miscalculated the elasticity of demand, which is basically how many people are going to leave, relative to that price increase. And, so that's we've taken our lump on that. And that's been rough. And, we've had to cut a lot of costs in ways that don't affect revenue. But, luckily we haven't had to lay anybody off and we've been able to keep it going. So, I think that's been one of the more challenging, ugly things this year.
So, and this is why I enjoy this conversation. Yeah. I knew I'd enjoy this conversation so much because I could bring in 100 insurance agents and ask them that same question and they would probably think about it and I wouldn't get that authentic answer.
For sure.
And that's probably surprising to a lot of people watching this, but it's also not surprising to them because they run their own businesses too and they know how this works. I think it's surprising to them because you share your production numbers, you share the stuff and that people make assumptions. And I think this is for the sake of all of our mental health, we need to realize that everything isn't the pretty picture that everyone puts out there all the time. And I think that's important. I think we need more people like you who are very transparent about the challenges in their businesses, make it healthier for everybody.
Agreed.
That's the level of authenticity you've always had. And that's why I have a tremendous amount of respect for you. I have respect for a lot of insurance agents. They're small business owners. They're as I always say, the backbone of the American economy. They're putting their own money, their own capital into this. There's something really admirable about that to me. But this level of just transparency is, I would get this with very close friends, but even very close friends, I don't think I would get them to come on my podcast and say that. I mean, it's completely unprompted.
Sure.
I didn't know this. We just had lunch for an hour. I mean, we didn't talk about this. So it's interesting. So as you try and navigate this, we're in a challenging time in the insurance industry, obviously, right? Carriers don't want business. Every policy they sell, they're losing money on. I'm not really sure that I agree with the regulatory narrative. I have my own narrative, which I'll share really briefly with you, which is insurance carriers didn't really do the right thing in the heart of the pandemic. They did it first, but they didn't go far enough. And when we have record profit years for insurance carriers, we have record bonus years for insurance executives in the middle of arguably the biggest, crisis of our lifetimes. I think it's kind of a shitty thing for them to do, and I think they're taking what they deserve to an extent. Maybe we've gone a little too far, but this is a problem everyone's facing right now in this industry. So, any predictions on when it comes back to more normal?
I wish that I knew enough to talk intelligently about it. I think one of the things I'll say is that I think you have your theory, and one theory that I actually really believe in is that I think it's a complex problem to solve, and the actuaries generally nail it, right? Actuaries generally nail it, and I think that in this case, across almost every carrier, actuaries have not nailed it, and I think that's not because they're not good at their job. I think it's just incredibly difficult and complex. The economy is really weird. It's are we in a recession? Are we not in a recession? It's we were technically, but it didn't feel like it. And then then it feels like it and we're technically not. And, I think there's just a lot of weirdness, in terms of how to price things accurately. I think you see it a lot in the Florida housing market, is that I think Florida housing market, from an insurance perspective, has been underpriced for a long time. And they got 2 huge storms in 5 years. And I think now it's kind of caught up and people, rightfully so, are this is outrageous, but it's probably what it's just going to be moving forward, because now they have more data for their actuary tables. And I think it's the same thing on the auto insurance side. And I think that if it was just one company, I might think it was, negligence or greed or something like that. But I think the fact that every single major carrier is hurting, whether they're direct or agent based, it tells me that it's a complex problem to solve. And, yes, like inflation on goods has slowed down, but service inflation is not. And it's not supply chain anymore. Now it's labor. And, I think it's going to continue to be rough. And I think, every state, every municipality is a little bit differently in how they rate. Some states have regulatory issues. Some states have pricing issues. I think in my state, specifically in Georgia, they actually took 2 straight rate decreases in 2020 and 2021, which was unheard of for me as an agent. They rebated customers, which I thought was great, but now we're having loss ratio issues. And, not every agent, but I am, and a lot of other agents are who grow pretty effectively. But, I think part of it is that these insurance companies are trying to balance profitability and growth. And that is usually near impossible. And I think it goes back to what I was saying before about running in the red and you talking about me being, honest and authentic about it, is it's important for people to realize that generally you have to trade those 2 things off. You generally cannot be profitable and grow at the same time. You need very specific types of circumstances for that to be the case. If you want rapid growth, you're going to lose money. That's why startups take VC money and they just bleed cash and then they exit when they IPO, right? Yeah. And then other companies, once they IPO, they'll cut all the staff and they'll get profitable because they have to harvest the profit. It's very hard to do both, right? We're trading profit right now for growth in our agency. And I think that's what's happened with the carriers the last few years. They traded profit for growth. And I think they just went maybe a little bit too far. And now they're trying to get profitable again without slowing down growth too much. And that makes it hard because, you can underwrite on technicalities of who you're going to take, or you can try to price it. And it's a fine line between the two. So I think you got all these carriers trying to have the best of both worlds with growth and profitability. And it's just incredibly difficult and incredibly hard.
Yeah, it certainly is. And it's a tough environment for folks to grow right now, even agencies who want to grow, because, the carriers they're working with may not want to grow. So it's kind of a conflicting, interest at this point. But, I mean, personally, I think we'll see things start to normalize in 2024, and hopefully by the end of 2024, a much more normal. Like, I'm confident in that. This time last year, everyone was saying January 2023, everything's going on, and I was like, I think you guys are kind of crazy a little bit still. Like, I don't see it like turning around that fast. No, I do, but like, I don't know. Like, this is not my area of expertise for sure, but it's a challenging environment. We're all kind of in it together, but you're right. We're in lead clinic. So let's talk about like leads for a few minutes. And you've been really transparent on this in your newsletter. And I've encouraged some other agents to look at this, but you're still bullish on growth today.
I am.
You are still bullish on purchasing, leads or calls or, what your process is. You're still bullish on that. So kind of, your process is far different than everyone else's that I've seen. And right, like I work with a lot of agencies and I get to know their operations, right? I get to know as we see the data come in, right? We get a good barometer of like what I would call like the overall health metrics of their agency. You're actually tracking that like very specifically. And you have, for lack of a better words, a data operation, a data-driven operation. Can you, has that always been the case? Has that been an evolution? Kind of how did it get to this point?
Yeah. So I have 4 analysts today.
Full-time,
full-time, paid well. And it's been the best investment I've made, in the business, I think possibly ever, and it's hard for me to say that because I've got some amazing people and who've come up with amazing processes and ideas, but it's the data, professionals have been just transformative for the business. And the way it came about originally was we had a guy, he's a consultant at Deloitte now, incredibly smart, incredibly talented. He actually got hired to be a salesperson, in the insurance agency. And he's just like, I don't really want to do this, but I think I could help you, with like this lead stuff or like the sales metrics. And I said, okay. And he just started, taking all the data. And I was like, can you just like give me something that shows me like these 4 metrics? And he came in the next day with like something way better. He came in like he visualized it in Microsoft Power BI. And I said, this is amazing. And so he just started kind of building from there. And then he left the organization and I felt lost, right? I went from having no data to having all this data and then managing 2 to that data. And then he left and I had nothing. And I was like, oh my God, like, what am I going to do? So I hired an analyst and he was just slammed. So I hired 2 more as like interns that I eventually promoted into full time. And eventually, they just diverged on what they did in the organization. But, at this point we try to track and measure everything, and some things are incredibly hard to track or near impossible to track, and that's okay. But, we use data in a lot of ways. And I think when you say, like, if I'm bullish on growth, the reason I'm bullish on growth is because the way that that we grow is that we do everything with a very measured, data focused approach, whether that's, marketing data or financial data or whatever it is. We've talked about this a million times, is that, a lot of agents are starting to figure out and track what their cost per acquisition is, right? Which is a great first step. Like, what does it cost you to acquire a customer? And that's really important because a lot of, captive agents, at least, maybe not so much independent agents, but captive agents, they have a year-end bonus or a quarterly bonus they need to hit. And sometimes these agents go for broke to hit it. And it's really important just to know, are you going to pay 3 times what to acquire your bonus of what you're going to get paid out? And I think people are starting to realize that it doesn't always make sense to go for broke to get bonus. And so we've tracked cost per acquisition forever, but it's really about 3 main pieces, right? So you need to know how long a customer stays with you. What's the average life of your customer? How long does it take you to break even on that acquisition? And then what does it cost to acquire? And if you know those 3 things and you can get those things in line, you can pretty much scale until those things are out of line. And so some years, you run like a 3-year break even. Some, like right now, it's 1-year break even. And so for us, part of that is rate environment. Part of that is our compensation plan. It's Allstate's compensation plan, in my opinion, is as good as it's ever been. I know not everybody shares that sentiment. I'm heavily new business focused, and so if you write a lot of new business, you get paid well. But we're running a 1-year break even, and it's extremely hard for us to look at a 1-year break even and say, you know what, I think we should slow down growth. Yeah. And that's a real, if we were running a 4-year break even and we felt like we were working efficiently, we would absolutely slow it down. But it's hard, but it's that you've got to know those things. And I think sometimes agents see those numbers and it feels like it's in another language. And it's really not that complicated if you just stop and break it down. And so they're pretty basic numbers. That's just a really good place to start for any agent who's trying to get a handle on should I spend money growing or should I not? And that's just really just a benchmark and a guide stick. But I think on the leads itself, we probably buy from like 20 different providers at this point. Lead Clinic is one of them, and we benchmark them against each other. Yeah. And I think what's most important is sharing that data with the providers. And we say, hey, like, here's where you stand amongst the other 20, providers. And they love that because they always want to be the best, because if they perform well, you'll spend more money, they make more money, everybody wins. And I think the natural tendency is for people not to share data and not to collaborate. And they keep their cards close. And I guess it's due to lack of trust or feeling like someone in the lead industry is screwing them, which I get, because like 5 years ago, the lead industry was extremely shady and slimy. I think it's gotten cleaned up a lot. Yeah. There's still bad actors, of course, but yeah, it's just, you got to know where you stand and where you want to go, and then figure out if it makes sense to try and bridge that gap or to go a different direction.
So let's speak. I'm going to speak to captive agents, or about captive agents now, because I think this is it's a big chunk of Lead Clinic business is heavily towards captive agents. I think that captive agents are more prone to buying leads because captive agents have been told that, and that segues in perfect, because I think that the captive agents, I don't know, and I'm going to ask you this in a minute, how many of you think know all 3 of those numbers? Because I think 0 besides you. Yeah. But outside of that, they're focused on the metrics that the carrier that they write for is focused on. And I think that everyone needs to realize, right, we're on the same team, but we're on different missions, right? I mean, they're trying to make a profitable organization for their shareholders, and agents are trying to make profitable businesses for the people who own the agency. And I think that that's normal business, right? But they're focused on the numbers they get from them they're not focused on kind of making their own numbers, right? You can't get the numbers you're talking about from an Allstate dash report, or, way back in the day when I was an Allstate agent, we call it, I think it was smart reports.
Or the CSRP.
CSRP.
The CSRP.
Yeah, CSRP. Yep.
Yeah.
I think at some point that stood for customer satisfaction, retention, and profitability, but it was customer satisfaction with Allstate, retention with Allstate, and profitability for Allstate, not for the agency. So it's an Allstate report. Like, it's great for Allstate, but it's not necessarily great for the agency. And I think you've done a great job of focused on the agency metrics that you need to be focused on. So in all of that, you're consulting now. You're consulting companies called Next Call Club, right?
It's Next Call Club, correct.
And so in your kind of like intake process with new clients with Next Call Club, do you ask them if they know those metrics?
I usually do, right? Okay. So I think your point about all the Allstate reports and all the Allstate metrics is a good one. It's something I talk about with a lot of agents before I agree to work with them. I say, you have to know what game you're playing. You have to know the game you're playing, because the rules of the game, dictate how you play the game. And if you don't understand the game you're playing, and then you don't understand the rules of the game that you're playing, you're just going to be completely lost. And I think sometimes, myself included, I'm definitely guilty of this. Is sometimes you just want to get started. And I think a lot of entrepreneurs are that way. Yeah. They get an idea, they want to just take action and get started. And I think that's amazing, right? It's like, get started and iterate rather than try to make it perfect. But you've got to know the game you're playing. And as we come into, whether you're a State Farm agent or a Farmers agent or an Allstate agent or even an independent agent, right? Every carrier or every partner relationship you're going to have they're going to dangle incentives for you to do the things that they want you to do. And that makes total sense, right? People respond to incentives. That's capitalism at work, and that's capitalism at its best. And I think sometimes people don't stop and think, and I didn't do this for a long time. I say, wait a minute. What if I just don't play the game and don't go for their incentive? And what if it actually makes more sense for me to just do this other thing over here? And that might change year to year depending on the rules of the game and how the bonus changes. But you've got to decide if you want to play. So I always ask people that question, is your goal profitability? Is your goal to max growth so you can get a bonus? What are you trying to achieve? And then we go from there. And I think that sometimes people know a lot of metrics that tell them to focus on. And I think running a small business is incredibly hard. And I've always been blessed to have at least one partner, at least one great partner. And that's helped me a lot. A lot of people are just solo business owners and they're in it on their own. And that's incredibly difficult. I've never been in that situation. I've always had at least one partner. And that gives you a sounding board. It gives you somebody to kind of test your ideas against. But, sometimes you're just so busy running the business, you don't stop to think, should I be going after this thing that the carrier tells me I should go after, or should I play this different game? And it's easy to say that you should just do that, but it can be hard, and you just got to think about it. And you've got to know the game you're playing, because, and it goes back to those profitability numbers of just, do I want to go for this, or would it make more sense for me to say the bonus isn't worth it this year? I'm going to, get profitable, focus on a really, under represented niche and just go for it. And I think that's what a lot of independent agents do. And they make whole careers on being a trucking insurance expert or being a cyber insurance expert. And us as captives, I think a lot of times we're trying to do everything and get everything every single time. And if you're everything to everybody, you're also nothing to everybody too. And so I think that's just one way to think about it.
I think it's a great way to think about that. So data is one of the most important parts of your operation, you'd say? Would that be a fair assessment?
Yeah. I think at this point, everybody who manages anybody, and then even frontline staff, are all looking at data every single day, whether that's to make strategic changes or just tactical changes on, how they need to manage their day.
So what metrics are frontline staff? So frontline staff, we're talking about actual insurance salespeople in your operation.
Yeah, or
what
customer service type representatives.
What are they looking at?
They're on the customer service side, it's, how many calls did they take? How many of those were first call resolutions? How many, tasks opened versus closed, right? So we want to see, how many things were resolved, on one call, like I said, one call resolution, or and if not, then how long is it taking for something to get resolved? And we'll use that data to find bottlenecks or things that need to be improved or optimized. And then on the sales side, the two main ones are really how many quotes did they do, right? How many product lines did they pitch? We want our salespeople to be around 14 or 15 per day. And then they're also looking at, we call it a call gap chart, but it's a visualization of their day as it pertains to the phone. And so it shows every outbound and inbound call. And what we do is we try to find gaps on that chart and say, hey, what's going on in these gaps? And I think sometimes when people see it, they think it's a micromanagement tool to say, hey, like, why aren't you on the phone? That's not it at all. What we really try to do is we try to assume positive intent and say, hey, if somebody's not on the phone and their whole job is to be on the phone selling all day, there's got to be a pretty good reason for them to not be on the phone. And that's where we use that data to start asking questions. Hey, like, what is slowing you down? Or what type of, hurdles or barriers are in the road that we can remove from you? Because the more of that type of stuff we can get off their plate and the more that we can keep them focused on talking to clients all day, the more we're going to sell, the more money they're going to make, the more money we're going to make, and the better everybody's going to be. So those are just a couple examples.
Do you find, like, in your, like, you talk to other agents probably quite frequently, especially it's part of your business now, but even before it was part of your business, do you find that, like, I think, like, very honestly, I think that, basically a unicorn in your environment.
Well, thank you.
Yeah. I mean, do you feel that way too? Like, and let's even take it away, because maybe, like, this visualization chart you just said sounds really cool, but, like, that might be, like, over the top for, like, the purposes of my question. I don't think it's over the top for your business, but I think it's over the top for the purpose of my question. But how many people just at the most basic data level actually have a concept of it? I think very few.
I think there's not as many. It should be every agent, right? Every agent, should have this answer, but it's easy to say that. It's hard in reality to execute on that, because, people need to be taught these things. I have a finance degree, which gave me a lot of understanding around financial metrics. And then I have a business degree, got an MBA, and that gave me a lot of, just kind of general strategic metrics. And then over time of just like an interest in data, my wife is a data scientist. And so, it's kind of been something I've always been interested in and been around, and I think not every agent is going to have the same interests or same natural skill set. I do believe that, everybody has like their own unique zone of genius, so to speak, right? Everyone's a genius at something, and we're not all geniuses at the same thing. And so I think that every agent probably should have, a handle on some of these numbers. Clearly not everything. I track way more than we really need to, but when I do need it, it's there. Even if it's once a quarter, I might go look at something. But I think it's on a few different people's shoulders, right? It's on us as agents to help each other and kind of say, hey, this is one way that we're winning. It's one of the reasons I try to share a lot of stuff around data, because I don't think a lot of people are doing that today. I think carriers, if you're a captive carrier, need to do a better job of putting not only the data in front of you in a way that you can digest it, but also insights, because it's one thing to give somebody data, but if you don't know what you're looking at or you're not experienced with it and you have to draw those insights yourself, it's basically, it can be worthless, right? You got to be fluent in data, and that takes practice and that takes time, and it needs to be something that's taught. And the more that people are taught, whether that's from educating themselves or the carrier going through kind of agent school, it's something that is becoming a bigger and bigger part of running a business. And I think agents are interested in buying in more than ever. And I think more agents than you would think are starting to get a handle on some of these numbers. And I think there's some new pieces of software coming out, and there's some new vendors out there that are helping agents do this, making it accessible. Hey, give us, this type of spreadsheet, and we can give you some key metrics to give you that insight and handle on your business. And I would definitely recommend that if you're an agent and you don't want to hire me for consulting, right, look into some of those businesses. And, I think there's like Agency Zoom is a big one that a lot of agents use. Performology is another one. I know we talked about Lead Swami earlier today. I don't know the owners of any of those people. I don't use any of those services. I have in-house analysts, but not everybody's going to want to hire an analyst in-house. And so if you don't have a handle on your data, those are a good place to start your search and see if they can help you, because they do make it a lot more accessible and it's a great place to start learning. And if you are really interested in it and it is really helping you, then maybe you go out and say, I'm going to make an investment in an analyst, because almost everybody I know in the insurance industry who's gone out and hired an analyst, that analyst has paid for themselves in the first 3 to 4 months.
I agree with that. I agree with that 100%. And I think, something we talked earlier about before we started the interview was kind of you're consulting clients, but you kind of have a baseline of where you need them to be before you can start working with them. And, I don't remember exactly what the threshold was, but I think that it makes sense, right? If you're not at a certain scale already, you may not financially be able to afford an analyst today, right?
Right.
But these other services, and you mentioned a few of them I've heard before, and some of my clients may use those. I know, we talked a little bit about Lead Swami, and I think that they look at a lot of the metrics that you look at too, and they it's a nice do it for you solution.
For sure.
And I think so. I say all that because, right, I was an agent. I've started all of the insurance agencies I've ever been a part of with zero policies. I've never. And I'm trying to think through this really quick. I've never made an acquisition.
Okay.
I've made many sales, but never an acquisition, because we know how to drive new business. Why we didn't need it. Sure, if the great opportunity came, it may have been something we'd consider. It was never something that said no to, but the right opportunity never presented itself. And so with that, I think that coming from a place of starting with zero policies, it's like, this is a scary place. I have no revenue. What do I do? Now, Andrew's telling me I need to hire a data scientist. This sounds like it's going to be someone I need to pay like $100,000 a year to, and I don't have the $100,000. And I think that these services are something that can accelerate you or get you on that path early, because if you don't know your numbers, what the hell do you know at some point?
Something I always tell agents is you've got to change the way you manage your business as you grow. And I think a general rule of thumb, it's not perfect, it's just every time you double, you need to either rethink how you run the business or you need to reorg. And the way you run a $0 scratch agency is different than you run a $1 million premium agency versus 2 versus 4 versus 8 versus 16. And I think a lot of agents, what you're seeing a lot of consolidation, at least in the Allstate world. And I think you're starting to see it in Farmers, and it's been happening in the independent world for a long time, is where there's a lot of consolidation. And I think agents who kind of get to this 6 to 10 million mark are like, what if I buy a 10 or a $15 million agency and get really big really fast? And I think it's a great strategy. I think a couple of mistakes that agents make, and I think a couple of landmines that maybe listeners could watch out for, is first is I think they tend to overpay. People look at this big book and they say, wow, I can go to 20 plus million and be like one of the big boys. And they'll pay, twice what they should because they feel like it's this unicorn, this opportunity. Or they just don't know how to value it, right? Both happen, but I think sometimes people are too eager. And I'm guilty of that, right? The first acquisition I made, because I've made 6 now. Okay. So, of the 32 million, about 24 million of that's been organic, but I always buy $1.5 to around $2.5 million books. I try to buy small books. But the first book I bought, I overpaid for, and I didn't know what I didn't know. And I was like, wow, this is such a great opportunity, and I don't want to miss it, right? I don't want to miss out on it, until I realized how many there are always for sale, and there will always be more opportunities. And it goes back to what I talked about earlier. Is like, it's important to understand how long is a customer going to stick around and what does it cost to acquire? Because sometimes I'll look at a book and be like, this is a really great opportunity, but the cost that I'm paying per item to acquire is twice what I could acquire for myself. And you have to factor time into that, right? You have to factor how long would it take for me to acquire all these customers myself, but I shouldn't pay double, right? So I need to know how to value that book. And it's not good enough to just look at, an agency multiple chart, because that's just all arbitrary, right? Yeah. Like, it's just people making deals, and it's almost become like this self-fulfilling prophecy where people just reference the chart, and the chart has become like this thing. It's like somebody's put this, measuring stick in the ground, and everyone's just using that as the measuring stick. And I'm probably being a little reductive, and I don't mean to offend any of the brokers out there. I'm sure that it's not only that, right? I'm sure there's a lot more nuances to it. And the only reason I say this is because, Danny, my business partner, and I have done these acquisitions, and he usually does the valuation for us. He's building the financial models, and, we do it ourselves, and, we talk to the team and we decide what to pay. But a lot of people buy the books at too high a multiple. And I always say, look, you have to buy a book at the price that makes sense for you, not what makes sense for the seller, not what makes sense for somebody else, what makes sense for you, for what you're trying to accomplish in the long term. That's the first thing, is people overpay. Second is when people get big fast, they don't reorg. They try to run their business exactly the same way that they did before they acquired that business. And then they stop growing. They're like, oh my God, this is a mess. I have all these customer service calls. They're cleaning up mistakes. And what you have to just realize is that every time you double, you got to change how you operate, and you need specialization and middle managers as you continue to go up. And so when I talk with when I talk about people I'm consulting with, I do a couple things, but the two main ones are I help people build outbound calling teams. So a lot of people are starting to use telemarketers for leads, which I think is a great strategy. You can buy a call or you can generate that call yourself. And a lot of people are offshoring, to the Philippines, which is fine. I know a lot of people who have a lot of success with that. Like one of my friends has, a company called, Easy Live Leads that he does that, and has a lot of, customers that have a lot of success. I do everything US based though. And, so I always tell people like, look, like it's not going to be as cheap. It's going to cost more money, but it's going to be fully US based. They're going to be in your time zone. There's going to be no cultural differences. There's going to be, higher performance as well. There's going to be less TCPA risk. And hey, you know what? Like that's another job that we created in the US. And I think that resonates with some people, not everybody. And so when I think about an agent that's a fit for me, it's typically somebody who's got 3 or 4 dedicated salespeople and understand that we might not be the cheapest, but we're going to give them the best ROI. You're going to pay more for quality. And if you want cheap, that's not us. But if you want quality and you want advice and you want, from people who've done it, that's what it is. And then I think on the one-to-one consulting side, when I first started doing this, smaller agents would ask for help, and, I would say, okay. And I would bill them for it. And what I've started to do now is I'll do kind of like a 45-minute or 1 hour call with them. And if I feel like I can't adequately help them with what they need help with, because it's just either not my specialty or they need to get a few kind of like things in line first before I can help them, usually I'll just try to give them an hour of free advice and then refer them out to somebody. And really what I'm helping agents do is kind of go from like that 7 to 10 million to try to get them to 20 or 30 million, right? It's you're a pretty good size agency. You've been around for a little bit and you want to take that next step and start scaling up. And that's what I'm there to do. I help them get a handle on their financials, handle on their metrics, right? Get all those things cleaned up so then they can scale. Because if you get those metrics right, you can scale endlessly in theory.
Yeah. And I mean, like something you said there is really like, I'll say you're preaching the lead clinic gospel here, right? Price is only relevant in the absence of value. And if you deliver value, right? I tell every potential client that we work with, like, and I'm super direct. I'm like, we're not going to be the cheapest. I am competitive though. And I want to be your lowest cost per acquisition vendor. I do not care about what a cost per lead is. Like it's not interesting to me. I don't want to talk about it. Like I'm not selling $50 leads, but it doesn't matter, right? It matters if it converts, if it works. And yeah, there has to be a baseline we start at. And we can't just go crazy, right? And say, all right, you were buying like $2 garbage. We're going to now sell you $20, like best of the best. Like maybe there's a balance, but you have to measure value.
Absolutely.
And that's like getting back to the data. Like if you don't know, how are you measuring? You're just, what are we doing? I think I love small business owners because like I've said, like and as you just said, right, we're hiring another person in the US. Like these are small businesses. They're the backbone of the American economy. They're creating jobs in our community. There's something admirable about that, right? My family is like, my grandparents were all small business owners. Like I love it. Like it's in my DNA. Like I'm passionate about it, but it's also frustrating because it's like, are these guys, we need to get them to like understand the numbers behind it and more so like dig a little deeper than, I don't want to call them vanity metrics, but really vanity metrics. It's not, they're not vanity metrics. They're just other people's metrics. They're all
other people's metrics, right?
Yeah. So I think there is something admirable to these small business owners. And it's great that we have like really smart people who've been very successful at this who are now like coming out and helping them. There is that component. And I think that like what you're doing makes a lot of sense because you're helping these people and then being like, all right, I can't help you from here to here, but I can point you in the right direction from how to get from here to here. And then once you get here, I can help you get from, 10 million to 20 million or whatever you just said. And that's kind of where the magic starts to happen.
You said two things. And I think, let's do some myth busting, right?
Yeah.
It's, you talked about this idea of cost per acquisition, and I think that's the right way to think about it. And I've talked about that a few times on this podcast already, but the cost per lead is something people ask me all the time. What do you spend per lead? And I tell people very honestly, I pay $1 for a lead. I pay $15 for some leads, because at the end of the day, the cost per lead doesn't really matter. The cost per lead can matter when you're first getting started with a provider, right? And you don't want to spend $15 on a lead right out of the gate if you have no idea who they are or like the quality. It's like if there's no relationship there, yeah, you're going to want to keep that lead cost kind of low because you want to hedge your risk, which makes complete sense. But what happens over time, right? And if you're doing it the way that I know we do it, right? The way that I help people when I consult with them, or when you're dealing with your clients is, you start kind of in this middle ground, cast a wide net, and then the stuff that's not performing well, maybe we try to get that at a lower cost, right? We try to figure out, or if we can't get it at a lower cost, well, that's okay, right? Because it's not worth your time. But the stuff that's good, maybe you actually pay more money to get more of that, or get as much of it as you can, because if a lead is 3 times the price, but it converts at 3 times the rate, well, their cost per acquisition in theory should be the same. And it doesn't really matter at the end of the day, as long as you're converting them. So I think there's this race to the bottom on cost per lead. And you just, again, like everything else, you got to know there's trade-offs, right? A $1 lead could be amazing, right? You might get lucky and it could be amazing, but it also could be low intent and crap. And they're looking for a gift card or an iPad or something. And you're just lighting your money on fire, and even worse, wasting your people's time and burning them out on bad conversations. So that's the first myth. The second one is about this idea that people think that the leads are magic, right? Where do you get your best leads? I hear that all the time. And I tell people this, and almost every time somebody gives me a soapbox to stand on, like right now, I say, look, the leads are definitely a factor, but there are so many things that go into running a successful lead program, right? It's not only the leads, it's your CRM, it's your contact strategy, it's spam avoidance. It's, how do you stay in front of people? It's your callers, your outbound dialers. Do you have telemarketers? Are your salespeople calling, or are the leads just sitting there, not getting called? Once you do talk to them on the phone, are you having the right conversations? Are you asking for the sale? Are you following up? Are you working X days? There's so many things that go into it, and everybody starts with lead quality. They think it's the leads, and it's actually the opposite, right? The leads matter, but the leads don't matter that much if your process is broken, and the process doesn't matter, or the leads don't matter if your salespeople are great and the leads are great, but nobody's calling the leads. And what we've kind of figured out is that the leads are almost like the last piece of the puzzle, right? Get everything, obviously you want to get started, you need the leads to learn, but don't expect the leads to be kind of like the magic pill or the silver bullet, right? You need those leads to start learning about the process, to learn about the contact strategy, trial and error. And once you get those other things down, the leads can make a huge difference, right? But, I know for a fact, like, you'll be transparent with people and be like, hey, this $12 lead, is not the same as this $1 lead. And I'm not just charging you 12 because I can charge you 12, right? No. Some guys out there will do that. They'll charge you $12 for a lead that they probably should have sold for 4. And, they'll just take all that profit and they suck. And then you cancel with them and they just kind of run off and you run off. And then everyone has a bad taste in their mouth about the vendor or leads in general. But I think those two things are really important, is like, the leads are not magic. The leads are just a piece of the puzzle. And second is like, there's this artificial race to the bottom on lead cost, and lead cost is definitely a factor, but it's not all of it.
Yeah. Yeah. And, it's funny because I talk about the race to the bottom all the time. And, and when I meet with potential new clients, and right, I think we have a similar approach, right? We're probably more selective in the clients we work with than anyone thinks when they have our first meeting with us. But, and I tell people sometimes, like, especially because we talked about ego among insurance agents, some of them are a little too much ego. And like, I'll be like, I'm very direct. Those who know me, know sometimes it's like too much, but I'll be like, okay, we're confused right now. You think you're interviewing me. I'm also interviewing you. You don't seem to be on your best behavior. Stop being a jerk. Let's talk like people. We're both humans. We're on an even playing field. Like, let's just be nice to each other. So I think it's this point of like mutual respect at some point too. And I understand that agents are guarded with vendors because vendors have screwed them for a long time.
Absolutely.
I get it. I am an insurance agent this is my business, right? I came into lead generation. I tell everyone this. I just wanted to learn and see how bad I was getting screwed. It was a tolerance thing. If it was 5%, I wasn't really going to care. If it was like 50%, I was going to say, oh my God, I've wasted millions over the last decade. Like, Peter, why didn't you do this a long time ago? And then I kind of fell in love with it because it's so secret. It's so black box. It's no one talks about anything.
Yeah.
And like, I like played like private investigator, like, and it was like the coolest hobby that like I eventually like turned into a business. So I understand the distrust. But what do you encourage people like when they're going to work with a vendor? Like, how does an agent, how do they get that relationship? And let's not talk like, and this isn't, well, all right, it is a pitch, right? It's easy for me because like I am authentic. I want to have real conversations with people. Like I think the lead clinic experience, I know the lead clinic experience is 100% different than our competitors. So I'm really humble. So
For sure.
I've got to like bring myself back around. Like, no, I can talk about this. This is a good thing. But I'm not like being like, arrogant or it's a completely different experience. But let's say I didn't exist. How would you approach a vendor? I call them the usual suspects when I talk about like, the lead vendors everyone knows. How does an agent build that? And not an agent who's, one of the largest operators in the country, but like, a smaller startup or just bought. How do they make that connection with a vendor? How do you do that?
I think lead vendors specifically.
Yeah.
So,
I think so.
So I think one thing is to get a referral from somebody you know and trust if you can, right? Because, and ideally not to the company, to their rep. Because if they have a good relationship with a lead vendor, it's probably because they have a great rep who's working with them.
Yeah.
Because what a great rep at any lead company will do is they'll ask you for your disposition. Okay. So, and if people don't know what disposition is, it's, was it a do not call or a bad phone number or no contact or, oh no, I quoted it, or I quoted it and I sold it, or I quoted it and I didn't sell it. Right. Sharing that disposition will help that rep optimize your account. Because say we're buying from, EverQuote or Quote Wizard, and we're buying from Quote Wizard or EverQuote, and we're just getting a multi-car homeowner, right? But they might have 100 websites where they're generating leads or buying leads or whatever they're doing, and the agent's not going to have the ability to pick and choose which website that comes from, but that rep might be able to come and say, wow, 80% of the bad numbers came from one or two websites. We'll get rid of that and immediately increase your quality. So finding a rep who does that. So, but if you can't get a referral, right, also just understand that just because people on kind of like social media say a lead company sucks, doesn't mean that it actually does. Like I see people on social media talk all the time about how EverQuote's awful or Smart Financial's awful or All Web Leads is awful. Well, I buy from all three of those and they all have great success metrics. And a big part of that is that, we optimize the account. And so I think whenever you're going into a lead vendor, you have to vet them and say, hey, what I'm looking for is a partnership. And that's what you're looking for at lead clinics. What I'm looking for at Next Call Club. It's like, I want someone who treats me like a partner. I don't want a client. I don't want to be your vendor. I want to be a partner, and I want it to be back and forth and have understanding that if something's not working, let's share it with each other and let's fix it. I'm not afraid of bad feedback. I know you're not afraid of bad feedback.
Oh, I love bad feedback.
And inviting that from the agent gives them confidence to do it. So if you're the agent, find somebody who is going to be a good partner for you and say, hey, I'd love to do bi-weekly meetings where I send you all the results of my data so you can make it better. And I can't tell you, I know a lot of the reps at these companies and they love that. Those are their favorite clients and those are the people who have the most success because yes, there are companies that will, get $1,000 deposit and that's how the salesperson gets paid. But most people are getting paid on recurring spend on your account.
Yeah.
And there's a lot of work that goes into the integration for these lead companies to get you set up. So they're spending all this time, all this money, all this effort to get you to buy leads. And if you buy 100 leads and then turn off, that's not profitable for them, right? It's in their best interest to keep you happy. And it's in your best interest to sell the leads, right? And that's why you're doing this in the first place. So I think you've got to ask for that partnership. And if you feel like you're not getting it, ask to talk to their boss and ask for a new person, right? And just say, hey, before I want to cancel, could I have a different rep to see if I can have someone help me optimize my account? I'm really looking for, bi-weekly at first and then maybe monthly after it kind of locks in. But if you give those vendors the benefit of the doubt or you assume positive intent, I think that you'll have a much better result.
I agree with that. And I think that's something I always look for, partnership, right?
For sure.
And like we turn away a good chunk of business. And a good chunk of that business is folks that don't have the disposition data ready. It's critical. It's critical to measuring, success. And that's what we want to do. We need optimization.
Absolutely.
Andrew, when I was an Allstate agent, we're going back to 2015, which, as I said earlier, I get sensitive about my old age. It's like, it seems like a long time ago now, but in 2015, I was buying calls, live transfers primarily at the time. I don't think I was buying inbounds. Hell, I don't think I knew what the difference between the two was. And some people might not now know today. So I'll talk about the difference.
Let's talk through that.
Warm transfer is someone who's generally calling out on a data lead or making an outbound call and then transferring that call into your agency. Whereas an inbound is a consumer usually clicking a number on their mobile phone, like when they Google something, and it's a click to call, and then they're getting transferred to you. So they're two different real approaches. But I was buying calls. Calls were competitively priced back then, not so much today.
It was amazing back then, wasn't it?
Yeah, the ROI was great.
It was dumb.
Yeah, and the markets evolved, and really my journey to building Lead Clinic I was on a mission really just to be a more sophisticated lead buyer. Literally what I told everyone because it was true. At some point it evolved and I'm like, oh, okay, I think I'm going to turn this into a business. But I was on a mission to be a more sophisticated lead buyer. And I said, calls are really expensive. I want to move back to data leads and see if it can work. Now, and it can, obviously, as we both know, but I don't think you've ever been a call buyer, not a significant call buyer. You've chosen do this in-house internally, and that's what you're doing with Next Call Club. Talk to us about why that is. What's your decisioning logic there?
Back in 2015, I did buy some calls because, like you said, they were great. I think we were paying $20 for a call back then, and that was great. Now it's obviously, I think last year it got insanely expensive, and I think more people have entered the market, and I think costs are still high, but getting a little bit more reasonable. And I think there's a lot of factors. Supply went down due to a lot of carriers restricting who agents can buy calls from. Demand went up as people started getting paid more on new business, and all this kind of created this perfect storm. But I mean, even back in 2016 or 17, I stopped buying calls because they wanted $40 or $45 a call, and I didn't feel confident that I could make a meaningful ROI at a $45 call compared to what I could do in house. And so when we first started doing leads, we had all these kind of junior salespeople who really didn't understand the product yet. But they were selling policies and they were making the outbound calls. And what we started to do was we started to take all of our new salespeople and said, you know what, while you come in for the first month, while we're training you, whatever, we're going to have you make outbound calls and just transfer to the salespeople. And it worked extremely well. And, so we just kept doing it. It was initially just kind of like a training ground, right? Let's make sure they'll make outbound calls because we wanted our salespeople to make outbound calls. And when I took over the sales team, they were used to getting inbound calls from direct mail or societal events. And it was really hard to get those tenured salespeople to pick up the phone, dial out on a lead, overcome objections, or get hung up on. And so the telemarketers, and we don't refer to them as that. We call them sales development reps for a number of reasons. But they were a bridge from the tenured sales rep who didn't want to make outbound calls to the new, quote unquote, new sales rep that was going to make outbound calls. And so over time, as those outbound call reps moved into sales roles and they started dialing along with the team, we just always had these outbound call reps. And then we started to move away from it for a while. And I'll never forget sitting down with Peter, who is, one of my partners, and he runs our entire sales organization. And he's like, I think we should bring back callers because we went away from them for a few months. And I was like, well, let's just do the math on them. Let's just see if this makes sense to invest, because we had hit kind of, a tight year. It's 3 or 4 years ago. We had gone away from it and we were like, let's kind of cut that out. Let's save some money on it. And it was a classic example of being penny wise, pound foolish. Because it was 6 months in, we're like, maybe we bring callers back. We did the math. And what we realized was that we were generating our own kind of transfers at anywhere from $15 to $23. And I remember sitting there with Peter as we did this math and we're like, God, we're so stupid. God, we're so stupid. And, inexperience is probably the right word.
Yeah.
But it was a good lesson for me to say, I need to be thinking not about the cost of things, but I need to think about the cost and the opportunity cost. What does it cost me if I don't do this versus if I do this, right? What's the trade-off? Do like a pure scenario analysis. And so as I was thinking about getting into consulting, I tried to think about what we do really well. And one of those things that we do well is we always have a full-time outbound call team. So we have 6 people for our agency, and they're all US based. We actually pay ours $20 an hour. Not immediately, but if they're good, we move them up to that role. And there's metrics to hit that. And people think I'm crazy for paying that much. But what I tell them is like one SDR, one sales development rep for us, gets 20 to 25 transfers per day.
Wow. And
our salespeople, they do call the leads now, but not really, because our SDRs are keeping them so busy. So when we started Next Call Club, we tell other agents, hey, you should probably pay around $15 an hour, which at first was, this is like 6-8 months ago. I think $15 an hour felt like crazy to a lot of agents for an outbound caller. And they're like, anybody can do this. And I said, you're wrong. Not anybody can do this, or else you would have already done it. And they're like, you're right. And I don't say that to be a jerk. I don't say that to be snarky, but I think sometimes we say, oh man, they're just telemarketing, right? Which is why we don't call them telemarketers. Mm-hmm. Because does anybody aspire to be a telemarketer? I don't think so. No. I don't think it's an aspirational title. I think when you think of a telemarketer, you tend to have negative connotations. So we call them a sales development rep, which is industry standard for tech. And a lot of people are trying to get into tech, and it's very hard to break in, even as an SDR, basically an appointment setter in tech. But we always tell people like, hey, you can come in as an SDR for us, you can get licensed, become a sales agent, or you can go into tech, or we'll help you with whatever it is you need to do. That's the really long answer of why we don't buy calls, because for us, the most I'll pay for a call is like $35. So most of the time people will call me to sell calls, and I just say, look, like if you can give me a call for $35, I can maybe justify it, because I know that I can generate it at like I said, $15 to $23, and I'm willing to supplement in a different way, especially if it's an inbound, not really a warm transfer. If it's a warm transfer, I don't bother, because that's just what I'm doing in-house anyways. Sure. And I have full control. But an inbound, definitely different, because that's someone who's ready to talk always, right? But that's why. And so when I work with clients on Next Call Club, we want to help them build this, I always say, look, we're not the cheapest. The investment might be higher than you expect. But if you want to run sub $20 cost per transfer or per call, it's a great solution for you. And there's times where people are very interested, but I don't think they're a good fit. I don't think that we can get them the numbers that they need to make it worth it, not because we can't deliver the calls, but because they're not going to be able to take the calls at a rate in which it's going to let them sell and make the revenue that they need. So in that case, I usually recommend them to buy calls. And I say, look, when you get to this point, let me know. Let's bring this in-house and build it yourself. But I think it's a classic reminder, is like, you should always ask yourself, should I build this or should I buy this, right? Don't default to buy, don't default to build, but ask, should I build or should I buy?
That's really, it's a more insightful answer than I expected. I don't know why. I expected less when dealing with you, but like that was a really insightful answer, because like I think about that now in like a lot of things that I'm doing, like internally, like business decisions, like I'm going to make next week, like, and a lot of it is, do we build or do we buy? And, it's a little different for us because like we're essentially in the software space now. Right. So it's like building it can be really expensive. Buying it can be really expensive. There's trade-offs, and you really have to make that decision. But I think that it all comes down to scale at the end of the day for insurance agents. And if they don't, what you just said, right? If I can do all this for them, but they still can't get to their result, it's not a good fit.
Agreed.
And there is a better path for them to get to the next step. So it's almost like, we start at 0. We need to be at like, let's call it level 2 before we can unlock, the cheat codes to get from level 2 to level 10. But we got to get you to level 2 first. And there's a way to get there though. And I think that's the way we have to look at it with insurance agents. And I think another big takeaway that we didn't talk about earlier after you said it, but like every time you double, you have to reorg.
Yep.
Yes. I've never thought about it that directly, but I think about it in Lead Clinic all the time now. Like every time, like, right, we're a startup that has evolved from 0 customers to many customers, and we've made adjustments all along the way, partially because I love to adjust everything all the time, and I never like
You're a tinkerer.
Yeah. Oh yeah, I'm a tinkerer, big time. Yeah. And I think that's really the success of what we've done is like, there's always a better way. I'm not convinced the way that I thought about something 2 weeks ago was the right way to think about it. And I'm not convinced the way I'm thinking about it right now is the right way to think about it. Like, it's just, you have to do that. So is a tinkerer, is that a good thing or a bad thing in your mind?
I think that you need a tinkerer, but I think that if you're a tinkerer and there's nobody there that either can reel you in or that you won't, or if you're not a tinkerer who will listen to people around you who are smart, I think it can be dangerous because good things take time. I think that if you're a tinkerer and you don't listen to anybody and you're impulsive, things don't work out because you're constantly changing things. You could come across $1 billion idea, but if you don't execute on it, it's not going to matter. So I would just always say, like, I think I'm a little bit of a tinkerer, not too much. I like to ideate, but I've got a couple people around me, Peter and Danny both, do a really good job of being like, hey, I think it's a cool idea. I think it would be very hard to execute, or it's not core to our business, right? And I really trust them when they say that, because I know that they're going to tell me if they're like, this is something we should absolutely do, right? But if you don't have that and you just act on it, or people, don't speak up, it's just chaos, right? So it's like tinkering is good, but it's like anything in life, right? Moderation is important, and knowing where the line is. But one thing, that I will say is that I think you and I are very like-minded. And I think it's important, for agents out there listening to know that, like, not everybody has the same goals, right? Like, some people want freedom and they get there with money, right? So you need to optimize for profit and try to maximize your profit. And like, that tends to be like what I do, because I'm trying to long-term, I'm trying to grow. So I need my margins to be right so I can continue to afford that growth, right? I'm not going to post a profit at the end of the year. Most years, we should be around break even with growth. And that's kind of our goal. Some people are going to want to run it like a 20 or 30% profit maximization and don't care that much about growth. And that's okay, right? But I think it's also, some people are at a point where they've been in the business for 20 years and they don't care that much about profit. What they're getting is fine and growth is fine. And what they want is freedom of like their time or relationships. And sometimes like a call might be more expensive or the ROI might not be better, but it's just easy. You can turn it on, you can turn it off. You've got control. You don't have to hire staff, or you don't have to work with this partner and have to build out. And I think that's what's great about, there's so many options and there's so many ways to win, and everybody has their own goals. And I think sometimes it's easy for us to compare ourselves to others and say, wow, they're doing this crazy growth, I need to do that. Yeah. And you have to remind yourself, well, like, is that what I actually want? Do I want growth? Do I want profit? Do I want time? Like a lot of insurance agents, it's like their 4th or 5th business, and they have some like amazing business that makes 5 times as much money, and insurance is just one thing. And then there's other people like myself where insurance is the main business, and I've got like, the consulting on the side. So I think it's just always remember is like, understand what your finish line looks like, understand what success looks like for you, understand the goals you have, the game you're playing, and know that that's okay if it changes. It might change every year.
And it probably will change frequently, and it probably should change because, the natural, your priorities are different throughout different points in your life, right?
Absolutely.
You start a business, you're not married, you don't have kids, then you do, right? You need more security because now other people rely on you, and then, you're approaching retirement or whatever it is. Like, this is just kind of like the natural order of things to an extent. So, yeah, I think we all need to really know, and I think it's probably a good starting point before anyone calls either of us about anything. Absolutely. Is like, what's your goal? Like, what is your end game? And there's no right answers, no wrong answer. Correct. There's probably a lot of similar answers, and there's probably a few very unique answers. But knowing what your goal is, I think is mission critical to helping someone like Lead Clinic or Next Call Club help you. For a level of clarity for our listeners, your primary consulting business in Next Call Club is building these SDRs for agencies.
Absolutely. Yeah, absolutely.
Can you just tell us a bit on what your process is, how you do that? Give us a sales pitch of how you would explain it.
Like I said, there's 2 core parts of the business. One is me just doing one-on-one consulting with agents, and it's really just about getting a really good handle on their numbers, getting their processes kind of in line to scale and grow and take that next step, right? Maybe that involves an acquisition, maybe that's organic growth, but that's all that. And so I do some of that, and I am picky with who I decide to work with, because I want to make sure that if I do work with them, my goal is to return 10 times in value what they've paid me, right? Yeah. And if I don't think I can give them that, I try not to take them on. I'll refer them out. The outbound part of the business, the outbound team is really the core business. And we do it two different ways. We can help you build it inside your agency. We're a little bit more strict on the size, the makeup of the agency. We typically want to see that you have like some type of office manager or sales manager to help you kind of implement this, because we have a prescription and you need to follow the prescription or it's not going to work. And, we're not unaware of the amount of money that you're investing in this, right? It's like, you might not be paying, like we think our price is very reasonable, but there's other costs beyond our price, like the staff themselves or the leads that you might feed them or the technology that you decide to invest in, right? You're building a program inside your agency. You're making a large investment. So we're not unaware of that. So if you're the right size and makeup in your agency, we'll say, hey, do you want to build it yourself? Or do you want us to do it turnkey for you? What we do for most agents nowadays is we'll do it turnkey. So we hire the person, or we recruit, we hire, background check them, give them equipment, get everything set up, train them, and they just kind of roll. It's your phone system, it's your leads, it's your list, but we manage the person. We charge a flat service fee for that and then pass the wage and benefits on to you.
Okay.
And, it's been really successful. Like we have a couple people we just started a couple weeks ago, and we were just doing the ROI on their numbers. And we've got a Florida agent who's realizing like $1,250 per transfer, which is just incredible, much less in their first month. I don't want to say that everybody gets that in their first month or at all. Our goal is to get you at $20 or less is really like, over time. Another agent's, kind of in the $21, $22 mark in the first month. And, that's just the best kind of feeling, is that, we control the whole process. In some cases, and in other cases, we help you build it. Our main goal is to say, hey, we want to get your cost per quote down, your cost, therefore that's going to push your cost per item down. We want to keep your salespeople busy on the phone and kind of give you a little bit more control over the process rather than just, buying calls and paying $70, $80, $90, $100 in some case.
And then will this always be the same SDR that works for them? Do you have like SDRs? It's specific to that person's account or no?
We try to keep the SDR consistent. Okay. And so what we always tell people is, look, if that person wants to like move on or move up, then we're not going to stop them from doing that. We are 100% invested in helping employees grow. Again, whether that's with us or without us. I talk about that all the time. I want to help people hit their goals. I think that if you help people hit their goals, they tend to stick around. And if the only reason they'll leave is if they don't think they can hit their goals. And that's not always, by design. Sometimes that's just how it is. One of our employees who really well just got a job as an air traffic controller. We can't give him that, right? Yeah. Like we could give him everything but that, right? And we're super happy for him. But what we tell the agent is, look, we want to develop this person. We want to help them grow. And if that can be on your account, we will keep them there. So like, I'll give you an example. The person in Florida who's seen like $1,250 per transfer, their caller just came out of the gate and just crushed it. And so we went to them after like 2 weeks. We're like, hey, we need to give this person like a couple bucks an hour raise. And I'm like, and they're like, if you're not comfortable with that, that's fine. We'll get you somebody new and somebody else will pay for it, or we'll pay for it. We'll put it in our agency. People don't really have a problem because at the end of the day, we show them the math, and $1 an hour is like $250 a month. And I think sometimes people think, $1 an hour, $2 an hour, and it's like all arbitrary. It's kind of like that valuation chart that we talked about. It's like, I don't know if someone's worth that. But if you actually look at the dollars and cents, you're like, wow, that's nothing for like somebody who's doing so well. And so we try to keep it consistent because they kind of become like a part of the team, and we encourage the agent to include them on sales meetings, even though we're managing them, even though we're dealing with everything, and like we treat them just like any other employee, help them grow. But we say, try to integrate them into your agency too. And we'll try to keep them with you as long as you're okay with us giving them raises as they deserve it. And if not, that's okay. We're going to do right by that employee because we're hiring. We don't have like 50 employees who we then assign to people. We contract and then go hire somebody specifically for your agency and try to fit them into that.
And then these are usually remote.
Always remote.
This is one of the things we differ slightly on. And I would say that because there's a right answer and a wrong answer, right? I think my answer is probably more wrong than yours is here, because I think a lot of it's just like ingrained in my head and I'm trying to like get it out. But you've embraced remote work more than probably anyone I've seen in the insurance industry thus far. And it works well for you, obviously. How do you make it work so well?
Part of it is that we've been remote now for over 3 years. So,
COVID brought you remote though.
COVID pushed us remote, and
Pushed or brought you? Like
I would say
anyone
pushed.
Okay.
I would say pushed. So we were in Atlanta in Buckhead, which is, it's in the heart of it, and traffic in Atlanta is not great. It's not as bad as some of the other cities, but Atlanta traffic's not great. And we had some people who were commuting an hour and a half each way. And so when COVID kind of came around, and it was like February of 2020, it kind of, there's a lot of uncertainty in the world. And
of course.
So I think we put out like a message or an email, said, hey, if you feel like uncomfortable or like even slightly concerned, just, don't come in, just work from home, because everybody had laptops.
Okay.
We have like 50 employees in the insurance agency, and like 4 came in, of course, right? 4 came in, and we're like, okay, like let's just close the office then.
Yeah.
So we did that. And, I preferred in person, that most of the managers preferred in person. And I think part of that is like just preference. I think I just like the camaraderie of being in an office and kind of like shooting the shit with people throughout the day and getting to know people. It's a lot, you have to be a lot more intentional to get to know people in a remote environment. Second, I think there's a level of comfort of seeing people working. I think a lot of managers don't want to admit that because it sounds bad, but I mean, I'll admit it, right? There's a comfort in that. So we went remote. It quickly became very clear that like COVID wasn't going to be over by summer, like everybody said, right? Like it wasn't going to be over. So I remember talking to the team, just being like, guys, like we need to figure out how we recruit, hire, train remote, right? Because we're not going to slow this train down. And so we did it, and the team started posting record numbers. And so like 2021 comes around, everyone starts bringing people back to the office. And I think we put out like a poll or something that said like, how many of you would be happy to come back to the office? It was like 10%. I was like, ugh. And it was like, how many of you would actively consider looking for another job if you had to come back to the office? And it was like 60%.
Wow.
And so I was like, okay, the people have spoken.
Yeah.
It's not what a lot of the managers want, but it's what the team wants. So we just kind of went in on and embraced it and just went all in and never looked back. And so today, the insurance agency's full remote. Like I said, we're about 50 employees, and we're posting record numbers. And we're not on Zoom all day. We're not on Google all day. We have a chat system, and we do morning huddles for 10 minutes. And, we have some things that we do to kind of stay social, but you'd be surprised how people feel like the culture's really good. Like they're like, even in a remote environment, like the vibes are good. The culture's good. I feel like I know my coworkers. We had 2 guys, who went to Israel together, never met each other, and just went on this trip together.
Wow.
We had people like fly to Atlanta and go to Braves games together, like on their own dollar. And so I think that I said this on Facebook, or not on Facebook, on LinkedIn the other day. And I have a commercial real estate guy who, we kind of poke at each other, and he's always, talking like, pro office, anti work from home. And I'm obviously pro work from home because I do it. He definitely does kind of like the engagement bait thing, right? He's purposely like a little crunchy to try to get people to like comment on it, which is a good strategy. And I finally said to him, I was like, man, I was like, the only people I see advocating for return to office are commercial real estate professionals. So weird, right? And then he posted this thing. It was like, work from home risks to wipe out $800 million of value from the commercial real estate. And I was like, I did like the thing at the bottom. I said, investors miscalculating office demand risk to wipe out 800 million, fixed it for you. Right.
Yeah.
And I think it's just like an interesting conversation that it went from like work from home is not as good as in office to now it's like, oh, well, they're ruining a whole industry. And it's like, yeah, well, maybe take responsibility for your actions, right? We all make our choices, and maybe you shouldn't have gotten that 5-year balloon loan,
Yeah.
when money's cheap and greed is high and people get burned, it happens, right? But I do think there's a place for in-office work. I really do. I think there's room for work from home. And I think what's important to know is that it's not one size fits all. It works for us, but we've definitely had employees say, I want to be in an office, and they've left and gone to an agent that is an office. And so, it's about finding the right people. And I think after COVID, you saw a lot of people quitting, right? It was like, oh, everyone's quiet quitting, or there's like a great resignation or whatever. Sure. And I don't think that it was people, they're like, oh, people are rethinking their life. And I don't think that is necessarily true. I think it was you had some offices going in person, you had some offices going remote. And I think you just had a movement of people trying to get to what their preference was and was a better fit for them, and some people just prefer one over the other, or hybrid, or, and that's that. Yeah. And, in Atlanta, where you might commute an hour each way, that really sucks. But if you're in a smaller town where your commute's 10 minutes, that might not be a problem.
Yeah.
So
I think being adaptable and being flexible is a good thing. And I forgot after all this time that you are one of my favorite people on LinkedIn. I tell
Thanks, man.
a friend of someone we both know, right? Pooja Amin from Troutman
Yes.
Amin, right? I tell her all the time, I'm like, Pooja, it's entertaining on LinkedIn because sometimes like you get like feisty, and Andrew does too, and that's why I like it. I'm like, this is good. It keeps it interesting, and I love it. So I saw that the other day actually, and I was laughing. I'm like, you know what? He's giving it right back to this guy as he should. So if you're not following Andrew, you should be on Facebook and
Thanks for the
LinkedIn and
plug.
everyone. Of course. So the final thing that I'll ask you is, what would you tell an agent who isn't to the level you can help them at today? In these hour-long calls that you might, try and give them some basic advice. Like, I'm not asking for strategy or anything, more mindset. Like, what's your advice to them just as a small business owner?
I'd say a couple things. One, right, kind of back to what I said before, is like, know the game you're playing and understand that game might change from year to year. And know that you have a choice on what game you want to play. So that's the first thing. Second is try to know those three basic numbers, right? Try to understand your cost per acquisition, the lifetime of the customer, and then how long it takes you to break even. Try to figure those three things out. Somebody can reach out to me. I'll happily give them the equations. It's probably on my LinkedIn or Facebook somewhere. And then the third thing is that I say a lot of this to newer agents, but I know that it might not all be newer agents. The first 3 years are incredibly tough. It's going to be hard. Just know that, like, especially if you're starting scratch. But even if you're buying a book, like the first 3 years is like, there's just a lot of nuance in the insurance industry, and there's, you're trying to grow, you're trying to work on the business. Sometimes you're working in the business. So like the first 3 years are tough. And then what I always say to people is, if you can do whatever the hell you can to get over 5 or 6 million in premium.
Yep.
It gets so much easier when you do that. You start to make enough revenue to start to be able to start investing in some, what I would call moonshots, right? Some maybes, right? You don't have to only bet on sure things. You can take a bunch of maybes. Mm-hmm. Your risk tolerance can go up, and you start to pay yourself a little bit better of a salary. Because a lot of people don't take a salary or take a very meager salary the first few years because they're trying to sustain that growth. So what I would just say is, like, it's going to be hard the first few years no matter what, but do whatever the hell you can to get over that 5 million mark, because it starts to get a lot easier after that point.
Amazing. Andrew, thank you. It's been a pleasure to have you on. We'll have to do this again. It's great info. I know our viewers and listeners are gonna love it. They'll probably, many of them, be reaching out to you soon. And thanks for coming. It's been great. And we'll have you on again soon.
Awesome. Thanks, Peter.
Thank you.